Good morning, everybody, and welcome to the Trading Market Technicals June 15th morning call video. And yesterday was sort of the same price action that we've had in the last several weeks, maybe several months. News coming out of Greece, trumping the charts and creating this erratic choppiness. We had G Summit leaders indicating that they would be providing liquidity to any of the Greece banks if needed, pending on the outcome of the Greek elections. Now, that actually spiked the market higher, violently higher, and the market then sold off right after that. And as you notice, and I'll show you on the charts, bulls and bears probably lost money yesterday. And this is why I keep saying that if you are trading, day trading, swing trading, need to reduce your risk, need to reduce your size. And if there's nothing going on, just stay on the sidelines for now until this market can realign itself. There'll be plenty of opportunity, and one being I think the market is going to make a big move. And again, we're leaning right now. That we do have some mixed signals I mentioned yesterday, but I want to show you in the charts. It's all about Greece, and once that Greek election happens Sunday night, we're going to probably have a big gap up or a gap down come Monday morning, and then we're going to need to see if there's going to be additional follow through. Now, currently, as you know, the S&P 500, we have an inverted head and shoulders in a larger time frame. A shorter-term time frames, we have a head and shoulders pattern, which almost, believe it or not, was negated yesterday. Still valid, but basically hanging by a thread. So it looks like, as of right now, the longer-term time frames may take precedent. And again, news will trump the chart. So today is going to be a lackluster day, I would imagine. Because it is triple witch and it's options expiration, and usually you get a bullish bias. So I would really take it really light today. I would not be surprised if there is some selling at the end of the day. A lot of bigger firms and funds probably squaring off on their positions, not holding too much risk over the weekend, which is obviously a smart move. So let's get into the our market internals here, and as you can see, advancing, declining shares. A little more than little under 4-1. Still, not that great, but a little bit of panic buying here, and that was basically closed on that spike, which I want to show you. We have new highs, new lows, 35.55. Nothing really great here, but I want to show you the market momentum. And as you know, we indicated that anything over 100 is a little bit overbought, and that's what we have a reading right now, 101.04. Usually when we get some kind of reading like that, when we get past 101, something like this spike here, the next day, as you can see, we get some sort of a sell-off. Now, futures are right now, the E-mini S&P currently trading at up 3.25 this morning while I'm recording this. So we do have a little bit of risk appetite in the markets, not much, and I would not be surprised if the market does pull back today. Want to show you here, and these are all internals what I look at, the bullish percent S&P index, and I use an 8-day moving average, and as you can see, we did break out of that 8-day moving average, and now we have this hook coming up. This is the S&P line chart on the bottom, just to kind of show you where we are, and as you can see, this is bullish. Okay, this is a bullish indicator right now because we did break above the 8, which is a momentum moving average, and we are oversold here in the RSI 14. So again, a lot of good stuff pointing higher, but we need to see additional confirmation, and especially the headline risk coming out of Greece on Sunday. I wouldn't be too, let's say, optimistic right now to the upside until this thing clears off. Now, here is a 5-minute S&P spiders chart. Typical example of what I've been talking about lately, and I've spoken to many traders, investors, and hey, Mark, you're not doing too much, and of course I'm not doing too much, is because right now I'm preserving capital and I'm holding back over trading until this market really kind of breaks out to the upside and or to the downside. We've been in this choppy range this whole week. Last week we've gapped up, we've gapped down, we've gapped up, but we've held. We're just below that 1335 level in the S&P, so that doesn't tell me anything new. Basically, there's no new order flow, and what I'd be looking for was something fundamental, a reason why I would be taking a short or a long in a particular stock. Something that's news driven, maybe an earnings guidance or something like that. That'd be the best way to play the market. And even then, it's been difficult because markets move higher, and people are a lot of traders, novice traders, are trying to bottom pick the market here or the stock, for example. So if you see this area, this is exactly what happened, and this was a perfect ideal small 5-minute head and shoulders pattern here, neckline broken at the 133 area. So ideally, day trader would look to take a short here. What you have, we have that news coming out about the G20 summit, and right here in that area, we had this enormous spike up, violent spike to the upside, took all of the shorts out that was looking to get short this afternoon, and you can see you have this big confirmation here in volume, and then look what happened, right back down again. Took the long guys right out, and then right back up again into the close. Crazy market behavior. This is not a good way to be trading. And I always say, when in doubt, cash is a position. Everybody knows that who's been following me. I'd like to see this market start to act in a normal fashion, and it's not. It hasn't. So we want to reduce our share size, reduce our exposure, and then trade the best setups. And if you have 2 or 3 setups, fine. There's always opportunity out there, and the bottom line is being in it for that opportunity. So there's no reason getting whipsawed out here, because mentally it frustrates the trader, and it takes a little bit of time to get back into the sync of things. So this is something that I wanted to show you, very important on a 5-minute SPY chart, and that's just totally crazy, But nonetheless, market does not like uncertainty, but does like when we get some sort of clarity coming out of the market. So that's a good thing. And I noticed that this morning too, they had some news coming out of the ECB about also pumping liquidity into the market if needed. So they're talking this market up just in case that we get a nasty sell-off come Monday morning, and need to be prepared for that. So that's pretty much what I've been hearing on the wires last night, early in the early morning session. The Far East Asia session were basically a mixed bag, but nothing really happened. Everything is idled, and I do expect nothing to happen today until sometime later in the day, and I wouldn't doubt if the market did sell off later in the afternoon. Now, this is that small head and shoulders pattern on the 30-minute S&P chart. And I noticed that we mentioned this is the neckline. Look what happened. We came into this neckline, and now we had basically popped up, and we rallied into the close based on that G20 news. So we're almost there. This is probably going to invalidate, I would imagine, today. And it is a 30-minute chart, so rightfully so, it wouldn't validate. But I want to show you the longer-term time frame like we mentioned yesterday. And this is that inverted head and shoulders pattern. Now, what I did was I put a measure and move here, and if you look up in this area, if in fact this does confirm, now we'll need to break out of this area, and we would need to basically back test this pattern, and that's really where you'd want to look to get in. So something like this, and then a move back, making some sort of a higher low, and then actually catapult, and that would be actually a perfect way to buy that. But that needs to close on a closing basis to confirm this inverted head and shoulders. And I did mention to you that we have head and shoulders patterns pretty much all over the inverted head and shoulders on the transportation sector, the 30-year bond. We also have the inverted head and shoulders. So that's something that's really critical that I would really keep an eye on and be really cautious about. So here is the VIX, and same thing with the 30-year bond. It's an inversely correlated, and as you can see here, what I did was I put the VIX on, right, measures risk and fear, and look what happened here. Head and shoulders on the VIX, inverted head and shoulders on the S&P 60-minute chart. Same thing. You have it all over. One thing I want to point out where I say that we might have some sort of a sell-off. Another good market indicator, measures overbought, oversold in the market, is the New York Stock Exchange McClellan Oscillator. Very, very reliable. Below again, S&P 500, and as you can see here, when you get these extreme lows, we get a little bit of a pop. Extreme lows, we get a little bit of a pop, and anything really above right in this area here, 50, 38. Really, I'd like to see it get above the 70 area. Really, 70, 75 would indicate overbought. We are not overbought as of yet, but we're getting close though. So I'd like to see the market pull back one more time before we really get involved and aggressive to the long side. Now, I still think that there's some sort of a sell-off, a pretty nasty sell-off to happen before the market actually does in fact move higher. Again, that is just an opinion, what I'm seeing on the charts, nothing that's tradable. But keep an eye on the McClellan Oscillator. I'm going to be showing this to you on pretty much on a daily basis. Very, very important. Okay, and here's that 60-minute chart that we were showing you. So this is something that I want you to be aware of. Very bullish. We didn't really not get our confirmation right now, so that's something that we need to keep an eye on. Now here's that daily chart. And look at the daily chart of the S&P 500. We're above the 200-day moving average, and what I'd like to see is now take this range out. We did close above it. But again, with the news coming out of Greece, anything can happen. And that's something that we really, really need to keep an eye on. Today, no reason to get overly aggressive. However, if the market did move up higher and we up into that yesterday's highs and the market started to roll over, wouldn't be inclined not to take a short for the day. But until then, really back off, take a little step back, take a breather. Trade a couple of setups today, make a little bit of money if possible, and then wait it out until Greece comes out. But again, realize that Monday it's going to be either a gap up or a gap down, and Europeans and the Asian markets are going to really follow through with this. What's going to happen in Greece? But I think it's going to be a pretty whipsawy day, because if it is the elections aren't held favorably, I do think that then you're going to have the major leaders in the ECB and the G20 leaders are going to step in and to kind of hold up this market. And I don't see a big market crash, so to speak. I just think that they're all over it, and they're going to know to provide liquidity into the markets. So got to be careful fighting the Fed. And does the market go down 100 points, 110 points, possibly 200 points? Sure, but I think it's going to be short-lived. So that's going to definitely create some sort of a buying opportunity. So the people that are longer-term investors would probably need to ride this out. Whereas swing trades, you have a profit. I would look to really take your profits off the table today. There's no reason to hold anything into a situation like that, a big event risk that's coming on Sunday night. But nonetheless, again, looking bullish here. Remember, I mentioned yesterday we do have an inside day for the last 6 days. Day up, day down, day up, day down, but nothing really taking out resistance or support. And even if you can even see this area here on the daily chart, big inverted head and shoulders, neckline coming in around 1330, 1335, 1335 actually, call it. We're above the 20-day moving average, above the 200-day, very bullish. And the transports, which are leaders, I'll show that to you in the next video. I'll put together a nice big video come Monday morning. They're also showing an inverted head and shoulders. So that's something that you really need to watch. Actually, and Russell, the IWMs held up really well yesterday. They were actually, they did pretty good. And that's a good measure of risk, saying that, look, we want to take on some risk here for the small caps. So something really to keep note of, okay? Take note of that. I want to show you what's going on economically today, these economic numbers coming out. We don't see anything in the earnings calendar today because earnings season has basically dried up. Some of these top 3, 4 tier companies reporting now, but that's basically about it. We're almost cleaning up for the earnings. We do have some numbers that could move the markets today. We have the Empire Manufacturing at 8:30, May Industrial Production 9:15. And then, of course, at 9:55, University Michigan Confidence as preliminary. So that actually could move the markets a little bit this morning, and then kind of drive the markets either higher or lower. More than likely, guys, statistics have it. Options expiration generally is a bullish bias, pending no event risk coming on Sunday. So that's good. That might change things. Usually, markets would open either up or down, reverse to the upside, and then just drift on low volume, especially in the summer on a summer Friday, into the close. So today might be a little different. We'll see if a lot of the big guys start squaring off their positions and lighten up their risk going into Sunday. But Sunday will definitely be interesting. I'm going to be in front of the computer screen Sunday and kind of monitoring and see what's happening. But it should be an interesting week next week. Okay, guys, have a great weekend. And again, when in doubt, cash is a position. Let's wait it out here until markets really can give us a definitive some sort of an answer to say, okay, we're headed up, we're headed higher, but I do expect a big move coming in the real near short term. Again, a lot of the stuff's pointing higher, so we'll see. The longer term time frames pointing higher, indicators are looking good to the upside, but again, news will trump the charts. Keep that in mind, okay? All right, everybody, have a great weekend, and we'll talk to you on Monday. Take care.